$1,400 put S&P 500. The time, 7:14 a.m. Pacific Standard Time. 7:30, 2012. 45 minutes of the opening bell. The S&P 500 will have a wall of resistance at 1,400. I will also be happy to tell you that we just purchased a contract at $22. That's us. We only did one. The rest of the MMTs are below the market at 1550. Why? Because you can see in the exchange model that at $66.20 on an 8/10/2012 $1,400 put, in the money now. In the money now. And what we did was we took one and we just bought a $4,400 markdown to our entry at $22. That means that dollar cost capital risk for that one contract is $4,400 wholesale entry to that 66.20 close. And these were written on Thursday. They're a weekly. People don't know how to trade them. That's why I'm the only one volume here. I will teach you how to control markets, period. And we needed to make one price so that we can start running the prices down lower and then buying heavier volume based on what the S&P 500 will actually end up doing. Does the S&P make it up there? We will go over the whole analysis again. We had live updates on the S&P 500 on 7/29/2012. You can find it there. Okay? Just do a search on the website. You'll find it there. Now, let's get back to the business at hand. The markets have ran extremely higher. We are going to have a lot of economic headwind this week. And what do we have? I'm going to bring it up to you now. July 31, we're going to have a Case-Shiller index, okay? The Chicago PMI. On the 31st of July, we'll have the consumer confidence. On August 1, we'll have the MBA mortgage index. But here's something very important. As we start the new calendar, August 1 month, we will have that ADP employment exchange data, which will be forward-looking to the jobs report this coming Friday. How to trade it. Most important, that ISM index will be out at 1000 on August 1. We know where that ISM was in the last reading. It was below, well, let's just put it this way. Below 50 is contraction. So we're going to have that construction spending, same thing. But here's the thing. August 1, at, what do we have? A big trade called what? FOMC. Ben Bernanke. That's going to be a rate decision by the Federal Reserve. Initial claims will be on August 2nd. We have continuing claims on August 2nd. We got the factory orders and the non-farm payrolls. Non-farm private payrolls is going to be extremely important. Why? Well, there are various reasons that we'll talk about that, MMTs, off of this video. Hourly earnings, average work week. There was a decline in there. We need to see that come up. We don't want to see the public getting deleveraged in their hourly work week. They need that to spend back in the economy. Now listen, ISM services, the services side of things, that's going to be very important. Okay, now everyone is looking for QE3, but this week, it's the end of the month. Either new money is going to come into the market and drive it higher to the next resistance levels. We just made a nice purchase at $22 on the $1,400 put. They were $66. Nobody can deny us of that. And yes, we did get it at the wholesale price to start where this market would be, so that we can get lower prices at 1550, 1560 with our other MMTs. And yes, there is 2 weeks to this expiration, but once again, Listen, our market maker school makes markets by getting these markdowns in all of them, just like we shorted that Google trade. Once again, I'm going to conclude, and then I'm going to go back to the $10 reversal, and I'm going to go back to these put options that were transacted and how the calls were inflated going into Monday morning, and how these puts are back to their closes of last Friday when they were hitting their levels then. Now they're back to those even levels. But once again, we will have the other MMTs steal the bid. The MMT S&P 500 Index Market Maker Apprenticeship will learn with these live entries so that as we move forward in our journey, when you're buying 30 of these contracts and they mark them up $30, you're making $90,000. That's what it's about. Wholesale.